Hey guys, so welcome back to Smart Trader and thank you so much for all your wishes for my birthday. So for the ones who didn't know, my birthday was yesterday, that is July 5th on a Sunday. So most of them wished me on a lot of platforms, Instagram, Facebook, WhatsApp and so on. So in case I didn't reply to you guys, I'm really sorry. Maybe I would have missed a lot of messages, but definitely I'll check all those and get back to you guys. So I'm really sorry, but anyways, thank you so much for all the love. Every year the number of messages and gifts I get are more. I got a lot of gifts, so if you see my Instagram or Facebook, you'll get to know too many gifts I got. So thank you so much for all the love and all the support. So anyways, let's get into the topic. So if you're not part of my YouTube channel, then go to our channel videos and watch all the videos, and if you're liking it, then definitely hit that subscribe button. And for the ones who wants additional services, always WhatsApp 7892652481 our customer care to know what are the services. And for the ones who wants to be part of my secret Telegram channel, only for learning, okay, no buy call, no sell call, nothing, only for learning purpose, long term learning, then you can be part of my secret Telegram channel by opening an account in Zerodha, Upstox, Angel Broking or Alice Blue. So the link is in video description. Click the link and open in any of your accounts. So currently Angel Broking is giving a free account opening, so you can also utilize those offers. So without wasting time, let's start off with today's topic.
Hi everyone. I've been following Smart Trader, that is Das Paul, since I think 2 years, and the progress which they've made and the consistency which they have done till now. I've been also trading through them. I've been following them. It's fantastic. Like, it's not basically pure luck, which people think of, but it is purely based on the team's research, their hard work they put into to make all the retail traders profitable, the initiative they have taken and the things they are doing there. It's very cool. So I'm also a part of it, and I hope many of you guys who are still not into the team of Smart Trader, I suggest you join them. Thank you.
So today is our option series 7. Okay, so if you are new here and you don't know about options, then I would recommend you to go to our playlist, and you have a playlist called Option Trading Beginner Series. So the past 6 series you can watch the beginner videos so that you understand the story what we are talking about today, or else you will get confused totally if you're seeing on the first day. If you are an expert, then this video is basically for a beginner, because we are going step by step. We will not learn everything in a one single video. We will learn baby steps. Okay, so patience is the key over here. So go through these videos, you will get some rough idea. So let's start off with today's topic. So I have mentioned in the below, we will talk only about ITM, ATM and OTM. It's nothing but in the money, at the money and out of the money. These are 3 concepts in options which you need to understand. Now you know how to do trading, how to do intraday, you know, strike price and all those premium basics you learned from all the classes. So now we will learn these concepts also. I'm not going to talk about the risk and returns on these concepts. Okay, it is a little bit bigger. In depth we will not go. First we will discuss the basic meaning out of it, so you can connect things later when I talk about in depth, so that you will have a free mind to understand. So now, in the money, at the money, out of the money, we will try to understand what exactly is this. So I have a very small example for you so that you don't get confused. Alright, so first of all, background. So you have something called strike price. We have already spoken what is strike price. So let's say you have 22,500 bank nifty or 22,000 etc. What is spot price? It's nothing but your market price. If I show you in the live, for example, you see these are the strike prices, right? 22,500 is your CE is call option, PE is put option. So 22,500 is your strike price. So you're betting that okay, it is gonna go, price is going to reach 22,500, 2,200. So price is gonna go down to 2,200. So call option means going up, put option means going down. That's what you're betting. So now, what is your market price? See, bank nifty is the main one, right? So bank nifty, let's say 22,198 is the current market price. So spot price, current market price, or whatever we call it. So 22,198 is the current price. Your target price is strike price. It's your target strike price, current market price. So there's always a difference between this and this. So what does this relationship mean? So they have a different name. They have kept a different name. They have a different logic. Later we will talk about logics, but the meaning we will discuss now. All right, so this example will teach you. This is an example for call option. Okay, put option, the direct ulta of it, the reverse of it. Okay, so call option is an example. Imagine your strike price is 22,500. So you're saying that the stock is going to reach 22,500. In case the current market price is still 22,300, it is below my strike price. So it is still down. It has not yet achieved the target which I told you, the bet which I told you. So therefore it is out of the money. Okay, so basically if it is not yet reached, it is out of the money. Out, you're out of the game, you're out of the money. And if it reaches exactly to my strike price, then my current market price, strike price, both are equal now, 22,500 in my example. So it is called at the money, at the money. In case it crosses 22,500 and my current market price is above my strike price. So I told my bet is 22,500 is my bet, and my price, my bank nifty original price went above that. So that's what I did. I bet that my price will go above this, so that I can make some profit, which we will discuss later how, what is the logic, but it is in the money. So this is called ITM, in the money, when it is within the money. So you betted that it will be more than 22,500, it is in 22,500, above it only, within your decided rate. So above whatever comes is in the money, and whatever is equal to your strike price will be at the money. And in case you didn't achieve still, so you're still in out of the money, you're not yet reached out of the money. Same thing if you talk about put option, it's directly ulta. Okay, it's directly ulta. So you're betting that the stock will fall to 22,500. In case your stock is still 22,700, that will become out of the money. Okay, it just becomes, this will become out of the money, and this will become in the money, and this will be at the money itself. So out of the money, in the money, at the money. So very simple example I've given you with the help of numbers, and I hope this will help you to understand now in the money, at the money, and out of the money. If you understand this meaning, just watch again and again. If you're not getting it, take your time and understand, see the previous concepts. Once you're able to relate all this, then we will make more logical videos, so that even you will understand it better, and as and when I research and teach you, when I will feel better. So if you are also a part of learning along with me, take baby steps. But if you're learning option first, I always suggest go and learn equity, learn the basics of equity. Without that, this is going to be difficult for you guys. Okay, so always paper trade. I always suggest, Smart Trader family always suggest to paper trade, because we care for you. So paper trade, don't waste your hard-earned money. Anyways, I'm sure a lot of people will lose money if you don't learn. So learn from any free sources you get anywhere. Just go and learn, stay positive. So share this video with all your friends and hit that like button, and see you soon in my next video. Till then, take care, bye bye.